Welcome back to another episode of Gimme Some Truth. We are excited to be in the booth today with Stan and Ian talking about the topic of moving to Japan. This will be a bigger topic for us in 2026. We have some written pieces that will be coming out later this year, but we wanted to have a podcast about it to tease those and also just get into it a little bit. Great amount of detail in the written pieces, so definitely take a look at those if this is a topic that interests you. As I said, they'll be coming out later this year, likely in multiple forms, but we'll kind of see how it plays out. So to kind of get started here, Ian, this was kind of your baby in terms of writing on this. First of all, where did that interest come from, and why is it an important topic in your mind?
Yeah, so I've always loved Japan as a country. I went on my honeymoon there, actually, about 10 years ago.
Wow.
It's one of my favorite countries in the world. It's a very special country to me, and I love the culture and the history and the art, and the economy is very interesting.
You're forgetting the most important part,
The food.
and this is the nexus that brings us all together. We all three of us swing Japanese irons.
Yes.
Oh, we do. Yeah, golf clubs. You're exactly right. Yeah, we definitely.
Yeah, they're a manufacturing powerhouse.
The ties that bind.
in many of the products that I love: cars, motorcycles, golf clubs,
Exactly.
Watches.
watches. Yeah.
There you go.
Some of the best watches in the world.
But
yeah, so
getting into this, you found some difficulties.
yes, so I really have always loved Japan, and so I've been reading a lot about Japan and about Americans in Japan and their investing needs, and unfortunately, a lot of Americans are frustrated right now in Japan. A lot of Americans there feel like they're locked out of market access.
And maybe didn't realize that before
Yes.
they went.
Right. So it's a very popular destination for Americans. A lot of Americans live there, but there are a lot of complexities with the Japanese regulatory system and the interaction with the U.S. regulatory system that leaves a lot of Americans without viable ways to invest, either in the U.S., in Japan, in Europe, in the rest of the world. So it was sort of like an intersection of interest for, as a financial advisor and someone who loves Japan. I'm like, well, how can we address this big market need in some way?
Stan, you've got a ton of experience in this area. Let's get maybe not fully into the weeds, but let's kind of tiptoe into tax residency and why that's so important as a topic for people that move to Japan.
Okay. Well, I mean, Japan is a tough tax country, right? Surprisingly, however, I will add that although, ordinary income tax rates climb pretty quickly in Japan compared to the U.S., that's not uncommon in developed countries around the world. Investment in a taxable account, assuming you have access to one, their tax rates are quite reasonable, right? I would
Capital taxes.
close to being on par with U.S. rules. I'd even go so far as to say.
They're comparable.
Yeah. And you have the opportunity, if you do move to Japan, you have some tax relief for the first 5 years, right, Ian?
Yes. So Japan has a very favorable non-permanent residency regime where your first 5 years you move to Japan, you are only subject to Japanese tax on your Japanese source income. That's like a Japanese employer paying you wages. If you somehow manage to have Japanese investments that are held in a Japanese company, and also any income that's remitted to Japan. So it's sort of like this hybrid, residency / remittance-based taxation, and that's 0 to 5 years. The hard part is that it abruptly shifts at 5 years plus 1 day to a global source taxation regime, which is so it's an interesting question where it's like there's a lot of planning we have to do with people about, well, how long are you going to be there?
Sure.
Are you going to be there for 5 years? Are you going to be there for 5 years and 1 week? Because those have very radically different outcomes for you. So maybe we think about, if you're going to be there for a longer term, 5-10 years, we start doing things differently in the earlier years. As if you're never going to be there, no chance to be there beyond 5 years, then we had to take a different approach.
And this idea of kind of almost a cliff stand is not uncommon in Americans moving abroad. There are other countries that have this idea of you can be there for a certain period, and then once you get to a certain spot, you're under different rules.
The UK comes to mind, New Zealand comes to mind, right? So not completely uncommon, but I like the term non-permanent resident.
Yeah.
So like, not uncommon to a U.S. green card holder versus a long-term U.S. green card holder, which is meaningful, but if you're a green card holder, you're subject to global tax. It's not quite. It's a much better tax situation than we offer. In the first 5 years, 7 years of residencies, for example.
So Japan does have a favorable early stage kind of regime.
Yes, come on in, try us on.
Yeah,
it's tax friendly until it's not.
Yeah.
Let's move into maybe the kind of once you're there, if you will, or the kind of the longer term planning, inheritance tax, gift taxing, things like that. It's not the same as in the U.S.
Yeah, they have a different system. Just inheritance in general is different, right? So in the U.S., we have very strong testamentary freedom, it's called, where you can leave your assets to whomever you want in the United States. Generally, there are some state-specific provisions that say some share has to go to the spouse or the child, but other than that, but there are some states where you can leave all your money to a trust to care for your dog, right? And then your wife and child gets nothing. So that's not the way it works in Japan. In Japan, there are much stronger protections for the spouse and the children. It's very hard, if not impossible, to say, write your wife or your child or your husband out of your will. Is that true, Stan?
This is very true, but I if you're watching and you're thinking, God, I love my dog so much more than my spouse, usually states in the United States have forced share rules to protect.
Some don't, though.
But
it's a state-by-state issue in the US.
We're not quite as free as that would imply.
Right.
I just want to point that out.
It's state-by-state in the U.S. Yeah.
I think an important thing about Japan to realize if you're going to live there long term is that inheritance tax is pretty severe.
Yeah.
And gift tax is kind of severe as well. And you're not in the U.S. you are free to share with your citizen spouse, right? Unlimited gifting.
Yes.
It's not considered a gift, right?
$1 trillion is
I mean, so so in Japan that's not the case, right? And so when you're working with an advisor, if your advisor knows what they're doing, it behooves you to think strategically. If you're going to be staying in Japan for the long haul, how do we own our assets? What's the division within the family? Because an important tax mitigation strategy is to make sure that there's not going to be, there's not going to be an unnecessarily massive tax bill when the first spouse dies, right? Which is then going to, dilute the family wealth, and then when the second spouse dies, there's very little legacy left for your kids, for example, right? So this factors in a lot of the planning discussions, right? It's not really an investment topic, but it's an important planning topic that I think exists in many countries, and Japan is certainly one that comes to the forefront in my mind. A lot of people in Japan use a lot of gifting strategies during their lifetime to mitigate that problem.
Yeah. Let's touch just briefly, Ian, on exit tax. Why does that matter to the respect that it does, and why should people be aware of it?
Well, they should be aware of it because the thresholds at which it starts to apply are quite low. Okay. They're lower than you would expect for what's essentially a wealth tax, right? It's not a tax on income. It's not a tax on gift. It's just a tax on the fair market value of your assets when you leave Japan. And so the threshold when it starts to kick in is 100 million yen, which is, as of now, February 2026, is around $600,000.
It sounds generous in yen terms.
Yeah, I know.
600 million.
Just divided by like 150, though, whatever the exchange rate is. So, that is an amount of wealth that a American in Japan will very likely have accumulated that much wealth, say, just working at a corporate job in Japan or whatever, right? Sure. If you do a stint in an international rotation in your company, you may not realize that, okay, now I'm going back to the US. Oh, here's a tax bill for
Sure.
a significant percentage of your wealth. And it's a wealth tax. So you often have to then, if you don't have any, it's even if you have illiquid, say it's all in real estate and you don't have any cash to pay that, you can't pay your tax bill in real estate. You have to pay it in cash.
Sure.
So you often have to liquidate assets, often at inopportune times,
Yep.
inopportune market cycles when the fair market values are depressed. They might not be your intention to have to sell an asset at that time.
Which they could also produce additional tax.
Yeah, so you might have to be liquidating assets. It just starts this chain of taxation
Yeah.
at a relatively low amount of wealth.
Yeah.
And so wealth taxation is does not exist in the United States currently. I mean, there's talk about implementing it,
Right.
but so Americans are just not familiar with this concept of wealth tax, and so we just want people need to be aware that there's a wealth tax when leaving Japan on a relatively low amount of money.
Yeah. Let's finish on this, Stan. It's not easy for every advisor in the U.S. to work with U.S. citizens that have moved to Japan. We do have some solutions here, but that's not the easiest needle to thread, is it?
No. I mean, so a lot of the retail options that tend to work out there in the world for Americans, none of them work in Japan, which creates a conundrum. Mm-hmm. We do have an institutional solution where we can work with clients, and then, unfortunately, that means that people that want to do it themselves or can't meet, basic threshold to work with us are, kind of in a tough place.
Yeah, it's almost just a kind of a call out. Be aware that this is an objective that you'll need to kind of deal with, if you will, or overcome if the plan is to move to Japan.
Yes.
Yeah, absolutely. So I think ultimately this podcast was really just to try to kind of wet the whistle, if you will. Ian put a lot of time and effort into the written part that will come out, and I think it's important to read through it and really fully understand the implications of moving to a country, a phenomenal country like Japan. I mean, it's so beautiful. It's such a desired place to be. But again, you have to be careful of just making sure that you're aware of some of the nuance before you take that step, or at a minimum have people involved in your life that can guide you through that decision. So we look forward to having that out later this year, and we thank you so much for joining us on another episode of Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.